Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB on this Monday afternoon. It is the 20th of April, and I'm Nadine Blaney, as always. Really good to be here with you. I was just checking my screen as we came on air because, of course, what started out as a fairly negative session has turned mildly positive. Take a look at the COB Australia Index, up by about 0.1%. Trade is done and dusted on this index, and so, really remarkably, pushing higher today. When I think about what helped drive this market, look no further than a bit of a rebound coming through in a couple of the banks. Not so for NAB. We'll get into the news of the day in just a moment. But CBA is up by 1.4%, of course, pretty heavy market weighting. Westpac, ANZ, all in positive territory. And then we've got the consumer discretionary names, particularly Wesfarmers, really staging a comeback, and the gold miners as well. 4 consecutive week of gains for the price of gold. But a really interesting session because we've watched the energy sector lag, and that is despite the fact that we did see the price of oil rising in this Asian session, of course, because we have this consternation around the Strait of Hormuz. We've got the U.S. taking control of an Iranian ship, and that has obviously caused a few jitters. Dubai's share index, for one, in very early trade is off by 1%, so still very unsettled in the Middle East. And we've got U.S. futures negative as well after yet another record-setting week on Wall Street. So today, keeping an eye trained on this market with the on-again, off-again gains and losses. We're watching, holding the line for many of these stocks that are coming through. Low energy as well, with those energy companies sinking, despite, of course, the fact that we've seen the oil price rising. So let's get to some of those sectors of the day in a little bit more detail, and look no further than the energy stocks, the worst performing sector, off by close to 3%. Pretty split though in terms of sector performance. 5 sectors higher, 6 sectors lower. As I mentioned, gold stocks came to the party today. Let's take a look at them. Newmont up by 2.4% to $159.98. Now, taking a look at the tech companies, a bit more of a mixed picture here. Life 360 up by 5.6% to $22.59. That again in the wake of its quarterly. And then if I look at Zipco, of course, we had its quarterly last week coming out on Friday. Really did meet expectations, at least for some of the guests that I've been speaking with. And Macquarie has upgraded its earnings forecast in the wake of those results. So highlighting, the ability to balance top-line U.S. growth with tight credit quality control. So really talking up Macquarie, lifting its price target. It did for Zip by 1.5% to $3.40. You can see it sitting there to end the day at $2.52. Okay, so let's get to some of our corporate top stories, and the stock of the day today, I won't try to hide that one from you, Viva Energy. So it says that it expects its Geelong refinery to operate at reduced capacity in the short term, coming online after that trading halt, after that refinery fire that broke out last week. So NAB adding its voice to the chorus, talking about provisioning needed to protect it from potential losses from borrowers, stressed by the Mideast crisis. So NAB shares getting knocked about significantly. Still in keeping with the Middle East conflict, and Worley says that it's expected to lower its earnings for the year by between $30 and $40 million. It was featured on the call today. Andrew Coleman from Team Invest and Scott Phillips from the Motley Fool joined me. So yeah, it was a good program. I hope you can check it out or catch up with it online at ausbiz.com.au. Qube as well, saying that it's got headwinds facing it in FY26, putting it down to the Middle East conflict, impacting underlying earnings by between $10 and $20 million. So higher fuel costs, lower agricultural volumes, and reduced forestry exports. So Monash IVF in the smaller end of the market also falling, rejected a revised takeover bid from that consortium that was chasing it. So we'll see what happens in terms of developments there. Well, talking about developments, let's go to Clifford Bennett. He is joining us from PropX24 with a view on markets. So pretty interesting to see all of the the headlines around the Strait of Hormuz lifting the price of oil yet again today.
Yes, indeed. It's a little bit a case of war on, war off, war on, war off. I think the underlying part of the reason why the Australian market came back a little bit firm, and I think a lot of equity futures markets around the world will do the same, is, the idea that, yes, it's another major hiccup, but we have to get through this, because the ramifications of not holding peace talks and not having a peace agreement are, too scary for the global economy for both sides to actually go down that path. And we've seen them suddenly move towards closer agreement before. Of course, the taking of that ship, Iran has said they're going to respond to that. That could be something that isn't ship for ship, so to speak, but more like closing the other strait that they can influence to the north. So things could get even tighter for energy supply. I do think the market is still sort of really treating this as something that's like a light switch. I know people know it isn't, but emotionally they're treating it as a light switch. We'll get peace talks and then, everything has just been one big, wonderful buying the dip story. And I hope that is the case. But there are real problems here that the Western media, the Wall Street media, isn't really addressing or picking up on the fact that Iran feels it has the upper hand here and does not see the need to capitulate on any of the major issues too significantly. If the United States goes into, if there are talks, because the Iranians aren't really saying they're going yet, the US has already dispatched its team, but Iran's sort of saying, what talks? But hopefully they will turn up. And I think if they can make an agreement, that's great. The risk is that the United States goes in with the same approach as it did previously, and which is why the talks only lasted 21 hours, expecting Iran to just give in on every major point. Meanwhile, the whole time, and I'm sorry to go on a little bit, but I really think this needs to be addressed by people to, protect their portfolios and keep them safe. The whole time, the US is building its forces, military forces, for a ground war or a greater attack on Iran very, very significantly. In fact, as fast as it can from all over the world. And that should be a concern that the United States really is ready to do something more significant if the talks aren't successful. And the talks will not be successful if the US doesn't allow a little bit more flexibility from its side, I think.
Okay, so we're always trying to think of this in a market's perspective. So it's risk on, risk off. Really depends on what day, what headline, but we are watching markets, equity markets, in the US at all-time highs. Today, our market turned positive, and that's despite energy weighing on the market, despite the oil price rising. Like it just feels a little bit like, you don't know where to look or where to hide. So where are you finding protection?
I mean, I'm a little bit fortunate in that I trade all asset classes around the world. So I've just reestablished, again, gone long oil, holding the long gold position, and looking to reestablish shorts in US Treasuries soon, but a little bit cautious there. I think this US equity market rally, to me, from years of experience, if I may, the price action of the last 2 weeks looks like there was a very large quantum level, if you like, fund that decided to just go all in on the US equity market. So it looks like one big massive buy order has been driving the rally of the last 2 weeks in the US equity market. If that order is filled completely, I think a lot of people could rush in to take advantage of these temporarily at least, exaggerated high levels in that US market. Because the US market's really pricing in a situation that was better than before the war began at this point. So I think in the short term, I'd be very cautious of further upside. If there was magically talks that said the war's over, they will leap again. but I just still think it's appropriate to approach your equity portfolio with a little bit of a caution here. The Australian market didn't have that tremendous rally, so it's probably not overpriced at the moment in the short term in the way that the US market is. If I had US equities, I'd be quite cautious. Australian equities, obviously, these are resource wars when we all get down to it, what's going on. And I've called them the resource wars since Venezuela. And I think there will be more resource wars, sadly, which means that, Australian equity markets, miners, resource stocks, and to some extent the banks, who are the bankers to some of the world's biggest mining companies, could continue to benefit. So there's always a silver lining, I guess. But hopefully in a week's time, we'll have far more firm footing, if you like, to assess the market. But I do think the US market's overbought at this point, whereas the Australian market is not.
Mm-hmm. Okay, can you just give me your view for the Aussie going forward? Because it has held up remarkably well.
Yeah, I've had a view out there for a while now, Nadine, where I think, and I did this once before when the Aussie was at 78 cents, and I said the Australian dollar could go to parity or $1.10 over the next 3 to 4 years. And every other bank economist came out and said, Clifford makes some good calls, but this time he's got it wrong, which is because it'll never go above 80 cents, they said. So people get complacent about where markets are now. I've made a similar call. I'm not as confident as I was back then of that call, which proved incredibly correct. The market went to $1.10, the Australian dollar over 3.5 years. But this time I think I see a capitulation of the US dollar or a repricing of the US dollar lower in a long-term historical sense. That's absolutely required and fundamentally sound as an argument. And that process could well allow the Australian dollar, which is a geographic safe haven, plus, an ally of the US, plus resource rich. In the environment of a falling US dollar, the Australian dollar could really trend in that direction, if not getting to that level. So I'm very bullish the Australian dollar in the long-term perspective. In the short-term perspective, obviously, it's a little bit news headline driven as well. But I'd be looking to buy the dip of the Australian dollar. I think the US dollar could have a bounce if the peace talks fail or do not happen. But I would be looking to sell that bounce in the US dollar, buy that dip in the Australian dollar for the very long term. And I hope some of our miners are listening, because this is a situation where you should be looking to hedge 1, 2, 3, 4 years ahead in terms of your FX exposures.
All right. Well, you've given us lots of food for thought, as per usual. Clifford Bennett.
Thanks for having me on.
Yeah, really great to have you as
Thank
well.
you.
Have a good afternoon. All right, so we are watching oil jumping, but stocks having a bit of a wobble. Look, refinery here is a big issue, will continue to be one, but we do have Viva Energy back online in terms of trading on the ASX, and saying that it will be operating at reduced capacity for some time. So I decided to ask my expert guests, Andrew Coleman from Team Invest and Scott Phillips from the Motley Fool, what they make of Viva Energy.
I wouldn't own Viva shares given the choice, because I don't know what the refining margins are going to look like. I don't know what the supply, what the volume is going to look like. Encouragingly for current shareholders on today's announcements, a couple of things. Firstly, they're going to get back to 90% within a couple of weeks, they reckon. Subject to plan inspections, that phrase may come back to haunt us and them, but subject to plan inspections, back to 90% until the repairs are done. They also said most of their unrefined crude actually comes from not the Middle East, but almost everywhere else, from Asia, North America, from South America.
Yeah, it's the too hard basket, like Scott. There's just too much going on. But I would say it's a sell, and it's been a sell for a couple of reasons. I mean, firstly, when it listed back in 2018, this was a business that made $500 million a year in profit. Ignoring the oil price for a second, they've never done that in every year since. So since IPO, they have only gone backwards in terms of profitability. That's not necessarily their fault. That's global competition. But the point is, it's a commodity business where you cannot be virtually certain earnings are going to rise into the future.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
So let's take a look at some of those market leaders. I talked about that price target revision to the upside coming from Macquarie for Zip, trading at $2.52 today. Tabcorp, another company that outperformed in terms of percentage change, no news, but up by 7%, which is pretty good. James Hardie, Life 360, and Guzman and Gomez. So a bit of an appetite, excuse the pun, for some of those higher growth, higher valuation companies as well. Viva, Worley, both warning on the Middle East and the impact on their businesses. New Hope in the energy space, along with Paladin and Karoon, all losing ground. Karoon ending the session at $2.02. So in the smaller end of the market, Actinogen Medical led the charge, up by close to 15% to just 5 cents per share. Those that did not perform, however, included, let's take a look, Atomic Eagle, off by 16% to 40 cents per share. Playside Studios as well, down 10% to 32 cents per share. Here we go. What's happening tonight? Well, we are still in the midst of U.S. quarterlies. No big names, but Steel Dynamicism, AGNC Investment Corp reporting. We get inflation data out of Canada. And we hear from ECB President Christine Lagarde. She's speaking at the annual reception of the Association of German Banks. We're expecting PMIs out of Europe this week as well, which will be really interesting. Quarterly production updates coming from Rio Tinto, Yancoal, Lynas, Stockland, and Hub24. So just a bit of a recap as to what happened on markets today. We did open up lower. When I was on air at about 10 a.m., we were down by about 0.3%, but we did see things really turn around through the afternoon. And that is part and parcel, I guess, because we are growing increasingly immune to what's happening in terms of the war in Iran. The latest is that the world is waiting and weighing up the fate of the Middle East ceasefire after the U.S. has seized that Iranian cargo ship. And also, I guess we're just keeping an eye on, everything that's coming in terms of the commodities complex for us here locally. And I'm just trying to see what ended up happening in China, because we did have a PBOC, left its lending benchmarks unchanged for the 11th month in April. So no stimulus coming through there, but leaving that prime loan rate unchanged for the 11th consecutive month. So it looks as if China's Q1 economic rebound could be impacted, of course, by the Iranian war, but that things are picking up quite well in China. So that brings us to the end of the program. Gold falling on that stronger U.S. dollar as we, continue to monitor those tensions brewing between the U.S. and Iran yet again. So we'll see you tomorrow morning. Hope you can catch up with anything you may have missed online.